From the News Channel 8 studios, this is Washington Business Tonight with Rebecca Cooper.
The business of foreclosure is one of the few sectors seeing a real boom in this economy. But some cash-strapped homeowners are turning to unscrupulous companies to help them hang on to their homes. Attorney Dena Roudybush has represented lenders, brokers, and national mortgage companies. Now she has focused her Fairfax practice on representing homeowners facing financial problems. Welcome, Dena.
Thank you. Thanks for having me.
Well, thank you for coming in. Your firm is called Compliance Counsel, and you're trying to help homeowners that are dealing with banks and dealing with other companies that may sometimes wittingly or unwittingly be out of compliance with the rules about foreclosure. Get to the heart of the biggest problem right now, scams. What are some of the worst ones that you're seeing?
The largest scams right now, and unfortunately it's very difficult for a homeowner to modify their own loan. So that's created a huge breeding ground for loss mitigation companies to contact homeowners to offer loss mitigation services because it's so difficult and they're in vulnerable situations. And so a number of them tout themselves as specialists when really they have absolutely no experience whatsoever. They're demanding huge upfront fees and they're doing little to nothing to save the homeowner.
Now explain to the rest of us who own property or own homes and want to make sure that nobody faces foreclosure, because it brings down everyone's real estate. So whether you're facing foreclosure or not, this whole epidemic is affecting all of us. Explain why it's no longer financially advantageous for many banks to work out loan modifications. It seems that now that they've chopped up your mortgage and sold it off to so many places, it's no longer in the bank's best interest to try and help you work out your loan modification. So what is your incentive to those banks to try and work something out?
Actually, depending on the was located in areas where the values have significantly dropped. Let's say a subordinate note where it's completely valueless. It's in their best interest to work out a loan modification, because if it goes to foreclosure, they have it's an unsecured loan at that point. There is no value to that note. So depending on where the area is and the homeowner's circumstance, that may have been a temporary hardship. So a temporary hardship, a temporary loss of job, you'd be able to, the banks would be much better able to work on a loan modification. It's in their best interest to keep that homeowner in the home. If it goes to foreclosure, they're taking huge losses. So primarily it would be to keep the homeowner in the house.
So what do you ascribe this whole mass of foreclosures to? Is it the homeowners not knowing enough about what they need to do? Is it banks not stopping, taking a deep breath, and finding a way to work things out? Where is it coming from?
You've actually narrowed it down to the two biggest problems. The lenders not exactly knowing how to handle the problem because it's so explosive. And secondly, homeowners not having one source of information to go to get answers. Obama's plan addresses a small minority of homeowners because it's for homeowners who are in whose notes are secured by Fannie Mae loans. Most of the clients that come to my office do not have Fannie Mae loans. So where do those homeowners go? They have nothing to compare their experience to. Some of the lenders, in order to reduce their losses, are offering what they call loan modifications, but they're very little reduction to that homeowner. Those are the homeowners that are then going into default on the loan modification because there was no net benefit to that homeowner. So they have no information, they have nothing to compare their experience to, and for the lenders, the problem is absolutely so massive. It's so great. Everyone is either in that situation or knows somebody that's in that situation. And so if the banks would step back and take stock of the situation, assess it, how can they address the homeowners and better formulate a plan? If you go to your lender's website right now, 9 times out of 10, you will not, there's no transparency. You will not see the criteria for a loan modification. That leaves everybody in the dark.
How do you get through that? Does it take an expert such as yourself or someone else, or can lenders learn more tricks of the trade to try and figure out ways through that lack of transparency?
It's through experience. Myself as counsel, I work with bank consultants, and I've done so many of these loan modifications and I've negotiated for homeowners for so long. I'm able to assess immediately when a client comes into my office who their lender is, how far in default they are, go through their finances, and I can tell them what their likely outcome is if they even qualify.
Dena Roudybush, thanks so much for joining us.
Thank you very much.
Appreciate it. And I should know you're working with Congressman Frank Wolf to try and set up a task force in Loudoun County to deal with this very issue.
We're working on that now.
Great. Thank you so much.